Welcome back to a new weekly outlook. We have had a ton happening since Friday, so let's do a quick recap and whatever we've had happening so far up until today's New York session, at the end of the New York session, and then what are we expecting for the remainder of the week. So this week or this weekend was pretty wild. It was one of those where the fundamentals actually mattered again. We had tariff shocks, a Fed pivot, a shutdown dragging into its third week, and a volatile rebound across equities, currencies, and crypto. So let's go over the macro fundamentals, take a look at the economic calendar, and then move on to the technical side right after. We're going to start from the top, what actually happened between October 10th and the 14th. So since Friday up until now. We had first Trump announcing up to 100% tariffs on Chinese goods and new export restrictions. Then right before market open, he was like, don't worry, we're going to end up getting a deal, and, pretty much trying to calm the markets down and everything like that. And then now we have news that China fired back by sanctioning U.S. units of a South Korean shipping giant and threatened further retaliatory measures on the industry. These sanctions will prohibit people or organizations in China from transacting with the U.S. units of the South Korean shipping giant. And if we scroll down, this graph here will show you how much actually China dominates this industry with 34.8%, and then following with that is South Korea. So there is news that South Korea is siding with the U.S. when it comes to this particular geopolitical tension. And then to counter that a bit, we have India fast-tracking a trade deal with the US. India is offering concessions on defense and agriculture to wrap up negotiations by November. So while China's relations with the US are deteriorating, India and US ties are quietly tightening, which is massive for longer-term positioning in Asian currencies and commodities. This week, they do have an Indian delegation in the US to advance the trade talks. So this week, we're just waiting for any headlines, any sort of optimism, any sort of developments on this particular news here. One of the main sticky points here was actually India buying Russian oil. So let's see if they can kind of work around that. Add in the Gaza ceasefire, which was a very fragile situation, but we ended up getting a de-escalation here, and the global risk sentiment turned from outright panic to cautious optimism by the end of the week. The main driver when it comes to the equities and when it comes to some of the riskier assets like crypto and all that stuff that we're talking about, in addition to all of the macro fundamentals that we just went over, was actually Powell. Powell signaled the central bank may stop shrinking its balance sheet in the coming months, which is effectively a pause in quantitative tightening. He also hinted that the labor data is weakening faster than they expected, which is a confirmation that the market's bet for an October rate cut is still on the table, and we're absolutely going to get a rate cut by the end of this month. The translation of whatever he said is that liquidity is coming back into the system, and the traders immediately shifted from fear to dip buying mode, and we saw that, and we'll see that on the technical side as well, with especially the Dow and S&P bounce. Gold also spiked near around 41.50, and then we saw a USD JPY roll over. And a combination of all of this is a classic liquidity rotation. And then we have shutdown news here with the US government, which is now moving into day 14th. And with over 4,000 federal workers that are laid off, there are millions that are unpaid, about 250,000 particularly, and then also another 2 million expected to go without pay this week. And the BLS has also literally stopped collecting data. So that means that the next CPI or job release data, all of that, it's basically just going to be guesses instead of actual field data. And that could, this data point that's going to be coming out, it could be wildly off, and the algorithms will overreact here. Trump doubled down, also saying that he's going to publish a list of Democrat programs to cut by Friday. And that makes this really more political theater than the fiscal policy that we would normally expect from our government. So for us as traders, this means just one thing. We're going to expect data distortion and increased volatility in the market. We can't lean on CPI or PCE anymore. It's going to be more about paying closer attention to price action and sentiment. When we're looking at overall, how did the markets digest all of this, and we'll see that on the technical side when we start to break down everything too, is that we saw a sharp sell-off on Friday when it came to the equities, US 30, S&P, NAS 100, and then a small recovery on Monday. Yesterday was a US bank holiday, but these equities are still under resistance, and structure is still favoring selling rips and not really chasing those bounces for buy opportunities. When we're looking at gold held pretty strong above 4,100. The real yields are compressing, so every dip has been bought. And my personal bias is still staying bullish on these dips as long as the shutdown risk and global uncertainty will persist in the market. When we're looking at USD/JPY very specifically, that rolled over from 152.2, confirming a short-term top, and that safe inflows into JPY are still remaining clean. When we're looking at GU and EU, both of them pretty weak, under supply. And again, we're going to take a look at that on the technical side. And then crypto, Ethereum, XRP, ADA, BTC, all of that got caught in the post-liquidation rebuild phase. Bitcoin is still holding above 111K, but nothing impulsive yet. So we're still very much in repair mode and not reversal mode there. When we're looking at this week, before we go on to the economic calendar side, there are 4 macro narratives that will be driving the sentiment, this week and even going into next week. Number 1 is going to be trade deals, especially with China and US. If there's even a hint of de-escalation before November, then risk assets will squeeze hard here. So that's one thing to pay attention to, and that's why we need to be paying attention to these headlines as well. Number 2 is Fed policy. October meeting odds are now fully pricing a rate cut. So if Powell stays dovish, then liquidity will continue to build into the system. Number 3 is shutdown duration. The longer it goes, the worse the data reliability gets. And that distorts algo trading and makes CPI week extremely volatile. Number 4 is earnings season. Banks gave us pretty good and strong data, and now the techs are stepping in. So everyone is watching if AI spending can keep justifying the valuations. And if that happens, then we're going to see that rally, especially with, a lot of like NASDAQ and equities that are very tech heavy. So overall, let's go ahead and jump over to the economic calendar. Start off quite easy. Yesterday was a US bank holiday, Columbus Day. And then today we had Powell talking, Bank of England Governor Bailey talking as well. We went over some of the macro fundamentals, especially with Powell already. Some FOMC members who will be talking, so we're still paying attention to what they're saying. But overall, the sentiment is October rate cut definitely happening. Now the next thing is, can we get another rate cut going into December? And specifically when we're looking at the rate cut news, kind of like giving you guys a bit of an insight before we actually get to the weekly outlook for that week. If we end up seeing that there's a lot more dissent happening within the Fed itself, there's a very high chance that we might not get a rate cut in December. So that's another thing to watch out for, especially as we're listening to these FOMC members. Then going into tomorrow, we have a lot of yellow and orange folders, and then some FOMC members again talking. And then if you're trading the Aussie dollar, you have the RBA governor who will be talking, employment change coming out, unemployment rate coming out from Australia. And then we have GDP data coming out from the UK in pre-London session. And then going into Thursday, we're supposed to get, PPI data, but we're not going to get any of that if the shutdown continues. But we do have a lot of FOMC members who will be talking. So all of this is going to be very important as well. They're going to be talking about the economic outlook at the Council on Foreign Relations in DC. Continue down. ECB president who will also be talking in New York session on Thursday. And then we also have Bank of Canada's governor who will be talking, some more FOMC members. And then Friday, all of it's yellow folder, and then IMF meetings are starting. So that is on the economic side, really paying attention to more than the actual data points, paying more attention to the headlines and to the 4 narratives that I told you guys about. Let's go ahead and hop over to the technical side now, starting off with US 30. Let's start with the monthly. We've had a massive rally up, right? We've had a dip that happened in April earlier this year, and then after that, massive rally up. Start to see a bit of exhaustion when it comes to the price action and candlestick anatomy. We did end up creating a new high at, let's just say, and we'll adjust this when we draw it down to lower time frames. And then we also have the bottom wick right here. So with the current monthly candle, you can see how we're pretty much at a doji. We're kind of exhausting out. And you'll see that with the candle body structures on lower time frames too. Drop down to the weekly. So last week we closed down pretty bearish, and then this week we gapped up. We still have not filled in completely that gap here as well. What I'm going to do is actually adjust this to the top wick here. So if price can break above that, then we're going to target for some buy opportunities to the upside for swing trade opportunities. And this is your 46,500. Price can continue pushing past that. We're looking for buying opportunities to come back into 47,000, which is a 500-point move. Let's drop down to the daily. So massive sell-off that happened on Friday that we just talked about, why it happened on the macro side. And then market opened up this week with a gap up. So as you can see today, we really pushed down and filled in majority of this gap. We have a little bit more to go right here. And then this was also a very strong consolidation on the daily time frame to the left. So that's a lot of liquidity that essentially this candle has grabbed here. What we need to see is, can price hold on to a resistance here into 46,500? If so, and we see that clean bearish structure on the lower time frames, then we're looking for sales to come right back down into the support area. So I'm going to mark that off right here, which is support because price is above it, and then resistance to the left. When we come on to the 4-hour time frame, we had a pretty good rally up since the market opened up today in New York session, and then came back and tapped into 46,500, rejected that, pulling back down. We just started having a new 4-hour candle formation. The New York session is closed right now. And so what we're looking for, if you're looking for sales to come right back down, is price to break below the support. As you can see to the left, all of this is clean consolidation. So what we're looking for is price to break the previous 4-hour low, show us that bearish volume. Then you have a pretty good range to the downside. You're looking at about almost a 300-point range, 300 to 400-point range of sell opportunities to the downside. Again, you still have that gap that has to be filled here, where that Friday candle closed right here, and then Sunday it opened up right here. So you still have this entire gap here that price has to come back and fill. So you're looking for some bearish pressure to the downside. If you're looking at higher time frame structure, we are creating pretty strong lower high formations here. So that was a pretty strong lower high, massive sell off, price came back up, tapped into some consolidation areas here and holding on to resistance. For any buying opportunities, what I want to see at the bare minimum on the hourly time frame is a support formation above this zone and then a continuation up. If that happens, you see a support formation here, no candle closures below this area. So you're looking for a bullish candle above the zone and then a push back up. You have those buying opportunities to come back and tap into 46,500. So this is about a 400-point range that you're looking at. For any selling opportunities, if we see candle closures below the zone and then a push back down, then we have those clean sells to come back down into the next zone, and then you just hold on to that trade to the downside. Let's come over to GBP USD. Same thing, start off with the monthly. As you can see, we're holding on to a pretty strong resistance level here with a nice top wick rejection at the previous candle body closures. And that is, we're just going to keep it at 1351. And then we're pretty close to a monthly support. I'm going to mark off the bottom wick rejection, which is pretty close to these candle body closures right here. Let's come on to the weekly. Pretty strong support. Even on the weekly, we've already tapped into that area of 1325. If price can hold on to a support here and then push back up, we're looking for buying opportunities to the upside, which basically means that either we're looking for a weaker dollar or we're looking for a stronger pound. If we're waiting for price to break below 1325, then we're waiting for a weaker pound or a stronger dollar to the downside. And then that is going to bring us down for about 100 pips to the downside for that wick fill. So about 107 right here. And that is a very key area, because if you look to the left, you can see that every time price taps into it, there's a massive rally up that happens, or if it's respecting it as resistance, then there's a very nice sell-off before that rally back up, which consolidates and then taps into that area once again here. So that's why this level will be very important if you're looking for selling opportunities. Drop down to the 4-hour time frame. On the intraday time frame, still quite bearish as soon as it enters below this 1351 area. After that, bearish, pushes back down, holding onto a support. So same thing, you wait for candle closures here, you wait for this previous high on the 4-hour time frame to be broken, and then you look for your buying opportunities to the upside. First targeting around 1.34, then 1345, and then 1351. For any selling opportunities, you wait for those continued candle closures below the zone and then a push back down. So you can look for a quick scalp or day trade opportunity here in London or even the next New York session. And then you look for those continued sells to the downside. Let's come over to EU. Starting off with the monthly, same thing, holding on to a pretty strong resistance. And you start to see how the candles are starting to print side by side here, right? It's a lot more clear. So we don't have a clear direction from a fundamental perspective just yet. We're waiting on the fundamental push, some sort of a catalyst to help us push in one direction or another. Then we have the bottom wick on the monthly candle, which if you look to the left, checks off as a pretty strong level, right? Pretty strong support, overall support, and then resistance. Drop down to the weekly. Weekly is showing us consolidation. So we've had a pretty nice bullish run up, a bit of a consolidation, retracement, push back up here in early 2025. And then this is the first, really the major consolidation that we're seeing here. So if price can continue holding on to a support, then we're looking for a zone to zone trade. If price breaks below the previous lows, then we're looking for selling opportunities to come back down and fill in this wick here, which is about, you're looking at 151 pips. For a zone to zone trade, we have a range of about 200 pips almost. And if price breaks above that, then, first the wick fill and then a continuation up from there into these previous highs. Let's drop down to the daily. And then on the daily, for the last couple of daily candles since Thursday, we have really just been printing side by side. So if price can break above this resistance, we're looking for those buying opportunities to the upside. That way you have a range of about 100 pips, 110 pips that you're looking at. And then nothing right here. So this would be a no trade range. And then sells would be below this area and push back down. Let's come over to some yen pairs. We have a top wick rejection on the monthly already, which we are going to adjust when we drop down to lower time frames and see actual candle body closures on the weekly and the daily. Then we have the support right here. Come on to the weekly time frame. So we've had a gap up that happened last week where you had this candle closing right here. And then last week we had the candle opening up right up top here, that entire gap that has yet to be filled, and then pushes back up, taps into that 205.3 area. This week, again, this where you had the candle body closure, and then we opened up here. So right now it seems like we're starting to fill in this gap here at least. So if price continues to break its own low and continues to push back down, then we're looking for selling opportunities to come back and fill in this gap down here. But that's only going to happen if we start to see that the yen is gaining a lot more strength. So as of right now, it's not very much a risk off sentiment or a fearful sentiment just yet into the market, because we do have some macro developments, which are, like the trade deal with the US and China, the ceasefire in the Middle East, all that stuff that's really helping the investors move back into some of that risk on assets, like the GBP and things like that, and not so much in the yen. But we can ultimately see, some more investors coming into the yen if we start to see that the US and China trade war continues, there's more escalations and things like that. And so when we drop down to the lower timeframes, you see that massive gap again that has yet to be filled. So that's why if we break below that previous daily low, then we're coming back down to fill in that gap here. That's why this level is so important. And then held on to a pretty strong resistance, rejected into 205. So we're kind of just hanging around here. No clean buy opportunities just yet, unless price can hold on to a very strong support right at this level. So on the 4-hour time frame, we have a bit of a support. If price can continue breaking its own highs to the upside, I would entertain buy opportunities if price broke above 202.5 or 203 area and then push back up. Other than that, I'm still very cautious, kind of just waiting on the sidelines to see if GJ is going to break below the zone for sells, and for buys, 202.5 or 203. USD JPY is sitting in this monthly consolidation. I'm just going to mark off those candle bodies right here because it seems like we keep rejecting this 152 area and not really able to break past it. with clean candle closures on the higher time frames, but we did come up into 153.349 area, 350 area, and then made a top wick and pulled right back down. I'm not going to make a support there just yet. I'm going to use the weekly time frame for my support areas, which is going to be this resistance right here. And if I look to the left, support for all this consolidation, and then also a strong resistance before I sell off. And that is 149.5. Drop down to the daily. So pretty similar to what happened with GJ. There was a gap that happened right when the market opened up, and then we rallied up, created a little bit of a high, pushed back down, and then on Friday we closed back down bearish, and that's really where the inflows came into the yen because of Trump announcing the additional tariffs on China and things like that. And then now, as we're getting more developments, we're looking at more of a bearish pressure on USD/JPY. So I'm really targeting anything sub 150, so like 149.500 first, and then ultimately coming back down and filling in those gaps. For that to happen, we do need the daily levels here to be broken. So I want price to break below this entire support area, continue pushing back down. So then we clear all of the support to the left, continue the bearish pressure to the downside, and we have a range of about 162 pips. If that trade is held, then this can ultimately turn into upwards of 300. For any buying opportunities, I want price to come back and establish a support here, because Friday, again, we had a candle body closure right here, and then Sunday it opened up right here, so we still have this gap to come in and fill. So fill in that gap, either establish a support here and then push back up. If that happens, then you have your buying opportunities. If price just breaks below this and goes right through it, then we have those sells to the downside. And then gold continues to rally as these tensions continue to increase, the government shutdown, and all that stuff. 4181.3. We've got a monthly candle body open. 3863.5. Drop down to the weekly. A massive rally up. Let's come on to the daily time frame, see if there's a support formation anywhere. So that is the previous daily support right here. I'm still very long. My bias is still very long on gold here. So any dips into this, really the 4,050 area or 4,080, I would be buying up any of those dips to the upside. When I come onto the 4-hour time frame, this is the reason why. Because actually, even on the daily time frame, if you look at the previous pullbacks and the continuation up, those wick rejections are really just into the resistance, not even the pure support area. So you can adjust that. At the bare minimum, this is what I'm looking at. I need a rejection into 4,050, which is this, or 4,080, and then push back up. When I come onto the 4-hour time frame, pretty strong resistance before that pullback. That's really where we got that bearish candle on the daily time frame, and then a rally up here again. And then yesterday in pre-London session, and then even going into London session, we had a bit of a bearish pullback, not able to break past this previous low here just yet. So for any sell opportunities, I would want price to continue pushing back down. On the 1-hour time frame, what I need to see is price breaking below this area right here, which is a current support. It breaks below that, we come back and kind of just tap into the previous support areas, 4,100 or so. And then if we can get a deeper pullback into 4,080 or 4,050, and then a push back up, those would be the longer term buy opportunities I would like to see. But we're still going to take advantage of any opportunities of sells as price breaks below the support, potentially comes back and taps into this area once more and then rallies up. I'm still very bullish here on gold. So overall, we're sitting in a very fragile neutral regime with the risk appetite still being very cautious, liquidity improving, but the headlines are still very messy. And so I'm going to overall stay short, bias on indices below those resistance zones on higher time frames, long on gold, so buying any of these dips, bearish on USD/JPY, and pretty neutral on crypto as of right now. We don't have clean directions just yet. So for now, I'm focusing more on defensive setups and sentiment aligned structure plays and not really predictions.